Russia's central bank decided to leave key interest rates unchanged at 8.25% last week, despite the pressure of inflation. Dmitry Dolgin, macroeconomic analyst from Alfa Bank, joins me down the line today to discuss the country's economic growth. Mr. Dolgin, thank you for joining me. Was the central bank decision to keep interest rates unchanged expected, and were you and the market satisfied with the commentary?
Well, the decision itself was rather expected, so no surprise there. But the commentary contains some confusing statements, and I guess the most important is that there were no clear indication of central bank's view on the inflation. It's been announcing its move towards inflation targeting, and in order to achieve that, it is very important for the central bank to make a clear communication to the market in terms of the regulator's inflation target. And in this comment, it mentioned that inflation is now 6.6% year on year, so exceeding the previous targets. Central bank made no indication as to what happened to the actual target, whether it was increased or not. So in a way, the market is again in the dark in terms of central bank's inflation target.
Do you think the central bank will raise borrowing costs again this year, or will the monetary tightening cause a slowdown in the economy?
Well, in its comment, the central bank also mentioned that it is quite satisfied with the current economic growth rate, and some might take it as an indication that, combined with increasing inflation, that might lead to upcoming increase in the interest rates. But to me, it actually sounds as if central bank is explaining to the cabinet why it increased the rates previously and why it's not a bad thing. So in a way, a central bank was explaining that the previous increase did not harm the economic growth rate, and that's why we do not actually take this comment as a guidance for further increase in the rate. So most likely the rates will stay unchanged at least until the end of the year.
The Prime Minister last week said the state should begin selling grain from stockpiles to stabilise supplies on the domestic market. Is this decision linked to inflation, and in your opinion, will this make a large difference?
Yes, obviously the decision was pretty much expected, and it is aimed at limiting the inflationary pressure, which came in the middle of summer, when global grain prices increased by 30 to 50%, and apparently now this spike is translating into the local inflation, and so that's why we saw some acceleration of it. So it's an expected move. In terms of its efficiency, those moves are never have immediate effect on the prices, if any. And if it will have any downward pressure on the price growth, it will most likely take place next year. While this year's inflation is more likely to reach 7% or stay around that level, so there might be some further acceleration until the year end.
What do you see for Russia's economic growth for the rest of the year, as we have seen a slowdown in agriculture and retail sales?
Well, yes, the second half of this year is most likely be less successful in terms of growth rate than the first half. We expect deceleration in the second half to 3% or maybe lower than that. The problem is that in the third quarter we have a very strong high base effect, as last year there was a very strong agricultural output, and that led to 5% year-on-year GDP growth in the third quarter 11. And this time, obviously, due to the weather conditions, agricultural sector is unlikely to show as strong performance as last year. And in the fourth quarter, we have a problem with the budget support. Normally, in the fourth quarter of each year, there is increased spending in terms of as a percentage of annual spending. This time, the distribution is different due to pre-election periods. In the first quarter, there was stronger support from the budget, and this means more even distribution of budget expenditures throughout the year. So in the fourth quarter this year, the support from the budget will be less than usual. So that pretty much adds up to strong obstacles to acceleration of economic growth rate. In terms of the full year, we're likely to see growth rates within 4% year on year, so in line with the previous year.
The price of the ruble is often linked with oil as it's Russia's largest export earner. What other factors could be affecting the currency at the moment?
Okay, so ruble actually had its ups and downs even relative to oil price performance. I see two key non-oil factors. First of all, it's the dynamics of non-oil exports, which is roughly around, I'd say 30 to 40% of the total exports. And recently we saw signs of deceleration of that important item. So while in the previous 2 years the growth was around 20 to 30%, now perhaps due to the slowdown of global demand and regional demand, the non-oil exports from Russia decelerated to around 4% year on year in terms of 9 months, 2012. And this is an additional factor limiting ruble appreciation. The second important factor is obviously the capital outflow, which has been pretty stable since September 2010. The recent central bank statistics suggest that, unfortunately, the capital outflow from Russia is not decelerating, even despite the improvement of the global mood, and this Burbank placement also did not improve the capital flow. So roughly around $5 to $6 billion per month of capital flowing out of Russia, which is also a factor, limiting the ruble performance. So as a result, while there might be some fluctuations in ruble in the short term, in the longer term, those two factors speak in favor of ruble depreciation, which is needed to rebalance the overall balance of payments.
Thank you, Mr. Dolgin, for your interesting insights and opinions. Make sure to keep on track of this week's market events by watching the Week Ahead interview with my colleague, Rowena Harris-Doughty. Take care.